lending your money to the United States government. This is called a treasury, and let me show you very briefly how the United States government works. So the United States government goes out and they collect tax dollars from Americans. The problem with these tax dollars is the United States government will go out and spend all of this money on things like infrastructure, healthcare, Medicare, and everything in between, but then they go out and spend even more money. And how do they fund that additional spending? They fund it through debt. Well, where do they go out and borrow this money from? One place where they borrow this money from is from regular people like you and me. So you and me can go and lend money to the United States government, and the government will pay you back plus interest. It is a loan to the United States government. This is called a treasury. And every economics textbook will tell you that a treasury is the safest form of investment. It's considered a risk-free investment. Why? Because the United States government always has the ability to pay back their debt. Why? Because if they need more money, they can just raise taxes, or this is going to get a little bit complicated, but they can also work with the central bank in the United States called the Federal Reserve Bank, who can then work to just print money and pay back your debt. So the United States government has the ability to always pay back their bills, but there's a chance that this printing of money could create inflation, which means that the value of the money that you can pay back isn't worth as much. But it can create a steady stream of income if this is something that you're interested in. This is not really a way to build wealth. It's not really a way to grow your wealth. It is a way to generate some income to hopefully at least combat inflation through a relatively low risk strategy. And low risk is very relative. Some people will say, don't ever do this, put your money in gold. Other people will say, yes, dump your money here. I mean, Warren Buffett owns billions and billions of dollars of these treasuries because he believes it's a safe place for him to park his money and generate some sort of interest. Now, how can you actually invest your money into these treasuries? Well, you can go directly to the government website. It's called Treasury Direct, and you can lend money to the United States government. And what you'll see is you're going to get a different interest rate depending on how long you invest your money for and how long your money is going to be tied up with the United States government. That can be a little bit complicated, and some people don't want to see their money tied up for that long. So the alternative would be to invest your money into a short-term ETF that's backed by treasuries. For example, there's an ETF called SGOV. This ETF, SGOV, is a short-term treasury ETF, meaning the price of this ETF doesn't really vary. You're investing into this ETF just to generate monthly interest. And because it's an ETF, it trades on the stock market, so you can buy it with any stock brokerage that you have, and now you're going to be getting paid with monthly interest payments deposited into your account. Kind of like a dividend, but it's not a profit share. It's an interest payment that you're getting, and it's going to be monthly, not every 3 months like most dividends are. And because it is a treasury, meaning a loan to the United States government, you get some additional benefits, which is that your interest is generally not subject to any state taxes or local taxes. So if you were in a high tax state like New York or California, this could be nice because now you can generate interest and not have to worry about paying these taxes. But there are a couple risks you want to be aware of. Number one, the interest rate that you're going to get is going to depend on the interest rate set by the Federal Reserve Bank. Like at the time of recording this video, SGOV is paying out an interest rate of around 4% a year. But if the Federal Reserve Bank cuts interest rates and continues to cut interest rates, well, then interest rates could fall, and the interest rate that you get from this ETF or these treasuries could also fall. The second thing is it is not FDIC insured. Like every other investment, it is not a bank. If you put your money into a high-yield savings account, well, you're FDIC insured, so if your bank went bankrupt, you could at least get the FDIC insured money back, which is up to $250,000. This ETF is not FDIC insured, so if the government were to go bankrupt, you wouldn't get your money back. But it is an alternative way for you to start generating some interest with relatively low friction as a way to park your money with a relatively low risk investment that you can sell really whenever you want and then put that money somewhere else, because again, this is not going to make you wealthy, but it's a way for you to generate some interest until you find a better investment, and it's an alternative to a high yield savings account if that's something you are not potentially interested in. So if you want to generate cash flow, that way you can replace your active income, your income from a job, you need to take some extra money and invest it, and you need to keep doing this consistently, week after week after week, month after month after month, year after year after year. And if you stay aggressive with this, in 10 years, I call it a decade of sacrifice, you will not be able to recognize yourself because you'll have a whole new stream of income that you can use to potentially live off of, or to supplement your lifestyle or buy even more of the income producing assets. You can decide how you want to do it and how aggressive you want to be, but if you stay consistent, you keep putting the money in and you make the sacrifice, well, now you can have a whole new stream of income from your investments, and it can be relatively passive. Not completely passive because you still got to oversee the investments, but more passive because you don't have to actually work in this asset. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.